Hello, everyone, and welcome to today's Technology Tuesday, hosted by Out of the Box Technology. We're thrilled to bring you these webinars on Tuesdays, featuring tips and tricks from in and outside of the industry, as well as welcoming some of our partner companies to talk about some of their expertise and what they can offer. My name is Jennifer Darachuk, and I will be your moderator today. If you have any questions as we go along through the presentation, you can go ahead and send those over to me at any time, and we'll be happy to answer those at the end of the presentation. A little bit about Out of the Box Technology, if you're not familiar with us. We have a whole host of experts in QuickBooks that can do training, integration, hosting, and support. We have a team of bookkeepers that offer wonderful bookkeeping services for small business, mid-sized business, franchises, and the like. We also have a whole development team that does website design, custom app development, data migrations, and branding. Today I'm really excited to welcome back Mark Ratcliffe with Avalara. And today Mark is going to talk to us about recent changes in sales tax compliance over the past 12 to 18 months, kind of what's going on with that landscape and what that looks like. So Mark, welcome. We're so happy to have you here today. And at this time, I will hand things over to you.
Great. Thanks, Jennifer. I will go ahead and share my screen here. Hopefully that's coming across okay.
Yep, looks beautiful.
All right, perfect. Well, I certainly want to take a moment to thank you, Jennifer, and all of our friends at Out of the Box. We really appreciate being able to be a part of Technology Tuesdays and really looking forward to the presentation today. And we'll go ahead and get started. So my name is Mark Ratcliffe. I'm one of the national sales managers here at Avalara. I've been here for about 5 years. I work on the team here that specifically helps our customers that are using QuickBooks primarily, either desktop or online. And then a lot of kind of small, medium-sized businesses will also be selling online, either through their own websites and shopping carts or through marketplaces like Amazon, eBay, Etsy, so on and so forth. A little background on Avalara for those on the call that have not heard of us or not really familiar with what we do. We've been around for about 15 years. We're headquartered in Seattle, Washington. I actually work in our satellite office in Durham, North Carolina. But we're currently the industry leader in sales tax compliance and really transactional tax compliance across the globe. We have content to handle sales tax here in the US, but also transactional tax in Canada, as well as VAT in Europe, South American tax. I think we currently handle about 180 countries worldwide for transactional tax compliance and returns filing. So I'm going to get into a little bit about our software and how we can help companies automate sales tax compliance in the future. But what I really want to spend the bulk of today's presentation on is just talking about sales tax compliance as a whole. Really, the agenda is going to be to talk about it at a high level. What are the things that you should be aware of? And we're going to spend some time talking about what changed over the last year. So I'm sure that most, if not everyone on the call has heard of the South Dakota versus Wayfair decision. It was a Supreme Court decision that came down last June. So we're a little over a year removed from that decision, and quite a bit has changed across the country as it relates to economic nexus. So I'm going to spend a lot of time talking about that and how it may affect your company. And then we'll talk about what we do, which is automating that entire process from calculating sales tax when it's needed on your invoices, all the way through to preparing and filing sales tax returns in the various states where you may be registered. We're also going to take a few moments at the end. Typically, this presentation will take in the range of 40 to 45 minutes. So we'll leave about 15 minutes open at the end for any questions that you have. More than happy to field them if it's just high level about sales tax compliance, or if you have specific questions, concerns about the current state of your company. To the best of my ability, I will address those questions. So let's go ahead and get started. Again, I like to start the presentation with this slide. It's really an iceberg, right? And it's a great representation of what I feel like is a common, either conception or misconception, depending on how you're looking at it, of sales tax compliance at a very high level. When I am on calls pretty regularly and I ask folks, what do you think of when I say, sales tax compliance? They think of a rate, right? They think of a percentage. They think about the fact that, hey, this weekend I went on Amazon and I ordered a product that I'm having shipped to me in a couple days, and I paid, 6% sales tax on that purchase, right? So thinking about whether you're selling to your customers or you're purchasing something from another company, it's that percentage of sales tax that's going to be typically added on to that transaction. But what I think this slide illustrates so well is really the complexity kind of underneath the surface, right? So just like the iceberg, the vast majority of kind of the dangerous part of the iceberg you don't really see above the waterline. That's how sales tax compliance is, right? You think about kind of rates, generally speaking, but there's a lot more that goes into it. Number one is nexus. And for those of you on the call that have not heard the phrase nexus, that is an industry term for the connection that your company establishes either with your home state or additional states to have to go register and collect and file sales tax on your sales into those states moving forward. Now, nexus can be created it can be created in a wide range of ways, and we're going to talk a lot about the different ways today, specifically economic nexus. But that's where everything starts with sales tax compliance. So in other words, if you don't know right now where your company has created an obligation to go collect and file sales tax, your nexus footprint, in other words, then it's very difficult to foresee you handling sales tax compliance well in the future, right? Because you don't even know where you need to be registered currently. So that's where every company has to start. Where do I have nexus? The second thing is product taxability. It's really product and service taxability. So depending on what your company sells, it either may or may not be taxable from state to state across the country. Now, companies that sell very generic or general tangible property, right? If you're a company and all you sell is broomsticks, for example, there's going to be pretty straightforward taxability with that. It's just a general tangible product. It's typically going to be fully taxable everywhere. You may have some exempt customers if you're selling to hospitals or schools or something in an industry that's exempt from sales tax. But in terms of your product, not a lot of complexity from a taxability standpoint. However, if your company sells software or you sell nutritional supplements or you sell medical devices or a long list of additional products and services, especially services, right? If you're a company that, let's say you sell HVAC units, but then you go on site and you install them, right? So there's an installation fee or there's a maintenance fee, or maybe you're a software company and in addition to selling your software, you also sell an implementation fee, right? Or you have some kind of maintenance contract affiliated with that software. These are all things that may or may not be taxable. It just depends on that particular state's laws. California, for example, does not tax software as a service, but they will partially tax services that are related to that software. So if you have like a maintenance contract on the same agreement that you have your software as a service, they'll typically partially tax that, even though they're not going to tax the software as a service itself. Number three there is jurisdiction assignment. That's just a very confusing way to say all the different rates, rules, and boundaries in the states. Now, you have to look at each individual state to determine its complexity in terms of number of rates or number of jurisdictions. Massachusetts, for example, is a flat rate state. So if you have to go register in that state and collect and file on your products into that state, there's only one sales tax rate you're ever going to have to concern yourself with. So not a lot of complexity there. However, the state of Texas has over 1,500 sales tax jurisdictions. A lot of different counties, cities, local jurisdictions. Sometimes states will have temporary jurisdictions. To give you an example of a temporary jurisdiction, so a few years ago, the Atlanta Braves built a new stadium for their baseball team. Part of how they funded that stadium was actually a temporary sales tax jurisdiction that was only in play for something along like 6 months or something like that. So these are things that different jurisdictions can implement at any random time, and you've got to make sure that you know when that's happening so that you're collecting that additional jurisdiction when it's in play. Number four there is exemption certificates. So when I mentioned earlier, you may be selling to companies that are exempt from sales tax. Let's say you sell to schools or you sell to hospitals or maybe you sell to nonprofits, whatever it may be. For them to avoid paying sales tax on that purchase, they typically have to be supplying you with a document that proves why they're exempt from sales tax, right? So you've got to have an exemption certificate. It's got to be a valid certificate, meaning that when you receive it, you can confirm that it's filled out correctly. And it's also got to be a current certificate, right? So if you get audited and one of your exempt customers, if the certificate you have on file for them has expired, the penalty from an audit standpoint is the same as if you didn't have a certificate at all. So number 5 there is essentially referring to your returns filing. So depending on how many states you have to go register in, you will very likely have a mixture of filing schedules. You may have some states that want you to file monthly. You may have some that want you to file quarterly, even some that want you to file annually. But as economic nexus affects a lot of companies, and we'll get into that here in just a minute, across the country, there are additional states you're having to go register in, right? So all of a sudden you go from filing returns in one state to maybe 30 states. And that's quite a bit more of a difficult task. Then finally, number 6 is audit readiness, right? How confident are you right now that you're managing everything kind of under the surface on this iceberg correctly, right? Do you know where you have nexus? Like right now, if asked directly, do you know exactly where you need to be registered based on the activities that you've had across the country, right? Do you know if you're taxing your products and services correctly in each state? When a random county in one of these states changes their sales tax rate by 0.5%, are you changing that? Are you staying on top of that? Do you have an exemption certificate on file for every customer that you're not charging sales tax? And then finally, who's filing the returns there, at your company? What happens when they're sick, or they go on vacation for 3 weeks? Who takes over that job? So this is all things that you have to consider, in being compliant with sales tax beyond just a simple rate, right? Which is usually the first thing that comes to mind. Let's talk about your company's specific sales tax compliance profile. And again, this is sort of repeating what I've already gone over, but it's very important, right? These are essentially kind of the 5 steps in making sure that you're being compliant, right? Nexus. Where do you need to be registered right now? The calculations, this slide is actually out of date. There's actually over 13,000 different sales tax jurisdictions within the U.S. And again, as I mentioned earlier, it just depends on the state. You have flat rate states, you have states like Texas that have over 1,500. There's a lot of states that fall in between those numbers. So states like California and Colorado have around 350 sales tax jurisdictions. I think a state like Alabama has about 800. I'm in North Carolina. I believe North Carolina has just shy of 200. It really just depends on the state. And then finally, exemption certificate management, right? Do you have a certificate on file for all of your exempt customers? And then, of course, the returns filing you're going to have from state to state. Let's spend a few moments and talk about product taxability. Now, keep in mind, this also refers to service taxability. So I want to make sure that that is clear. But these are some of my favorite kind of rules around taxability from state to state. They're interesting, they're humorous in some cases, and they're kind of absurd in some cases. And I won't read them all, line by line here, but just to show you kind of how absurd it can get and what level some states will take it to take a look at takeout in the state of Colorado. So if you go, you're in Colorado, you decide, hey, I'm going to go buy one of these fast food places and get a drink. When you pay for that drink, you're actually being charged sales tax on the straw and the cup lid of that drink, but the cup itself is exempt from sales tax. Another one of my favorites is the bagels in New York. This is an example that I use all the time in calls. So if you go to a bakery in New York, you order a bagel. If you do not have that bagel sliced, it will be exempt from sales tax. You will not pay sales tax on that transaction. However, the second that you tell them to slice it for you, you're going to pay sales tax. The reason for that is New York considers that as soon as you have a bagel sliced, that now there is a service included in that transaction that was not included previously, and all of a sudden it bumps you into a taxable transaction rather than an exempt transaction. And then finally, the candy bars in Indiana is just extremely unusual. Snickers bars in Indiana are subject to sales tax. Kit Kats and Twix are not. Now, the reason for this, because I've done a little bit of investigation on my end, believe it or not, has to do with the order in which the ingredients are presented on the back of the candy bar. And because certain ingredients come before others on a Snickers bar, it means that that particular candy bar will be taxable, versus Kit Kats and Twix bars are not taxable. So again, I won't read through any of these. I'm sure that you can see these, but just good examples of just kind of how absurd the taxability rules can be from state to state, depending on the type of product being sold or the type of service that's being sold. Let's talk about sourcing rules for a moment. Now, 99.5% of the time in the U.S., sales tax is going to be derived from the shipping address or the destination address. So if you're a company, if you ship products or you perform services in other states, or you ship products in other states, most of the time you're going to be collecting sales tax based on that customer's address, based on that destination address. Or if you go do jobs in other states, it's based on the job site address. There are some times where origin-based sourcing will apply. So a good example is the state of Virginia. So Virginia is an origin-based state for tangible goods. Now, this origin-based rule only applies to companies that are in Virginia and they're shipping a product somewhere in Virginia, right? So a company, again, that's based in Virginia, that's selling a tangible item. Let's go back to the broomstick example, selling broomsticks. They're shipping it somewhere in Virginia. They're going to charge tax based on where they're located, the origin address of the product, not the destination address. You can see there are some other states affected by this particular rule as well. There are even some mixed source states as well. But the vast majority of the time, and specifically for sales across borders, right, remote sales into other states, you're going to be focused on the destination address. Now let's talk about zip codes for a few moments. Now, there are a lot of companies out there that are calculating their sales tax based on zip codes. They're using zip codes. And I know this is true because I talk to probably 10, 15 companies a day, and half of them say, oh, I'm good calculating my sales tax. You know, I've got some tables that are broken out by zip code, and I feel like I'm doing a good job of it. Here's the problem with that. And this is something that one of my colleagues here at work says, and he's very correct, that zip codes were developed to deliver mail. They were not developed to estimate sales tax. And that's another thing that I want to point out. Anytime that you hear someone and they use the two words sales tax and then the word estimate in the same sentence, that's a problem, right? And I'll explain what I mean here. So take the state's example. So if you're using a zip code in the state of Massachusetts to calculate your sales tax, you're going to do just fine with that. Because it doesn't matter what zip code you use, it's a flat rate state. There's not a lot of complexity there. If you turn around and try to use a zip code to estimate the sales tax in some location in Texas, that's going to be a huge problem because you could have 40 or 50 different sales tax jurisdictions in one zip code. So what that's going to lead you to do is you're probably going to be collecting an estimate of 8% when you should be collecting 6.2%, or you might be collecting 5% when you should be collecting 8.2%, right? So again, zip codes were designed to deliver mail. They are not an effective way to calculate sales tax. And here's exactly why. So this is an overhead view of one neighborhood in Commerce City, Colorado. And you'll see that certain houses or certain rooftops, if you will, are highlighted in the color blue. And then there are some others that are highlighted either in yellow or green, depending on how it's coming across on your screen. But as you can see, the houses that are highlighted in blue have a sales tax rate of 9.25%. The houses that are highlighted either in yellow or green have a sales tax rate of 4.75%. So these are houses that are in the same neighborhood, in some cases right next to each other, that have a delta in sales tax rate of almost 5%. So if you're using a zip code to calculate sales tax in a state like Colorado, it is impossible that you would do that accurately. And there are other states that have maps that are drawn out that are just this absurd. The state of Alabama, if you go to a rooftop level, it'll look just like this. You'll have kind of random, and you can even see some of the houses there are sort of adrift. You know, the green and yellow houses are kind of adrift in a sea of blue there, right? So, you know, I don't know what the person did at Locust Street, you know, when they made a purchasing decision on their house, but they got a better deal than the person at Layden Street. Let's put it that way. But again, this is one neighborhood in one city, in one state, that's just going to show you that you've got to be drilling down to the rooftop. You've got to be accounting for all those different jurisdictions that are in play, and you see them listed there. You know, for the Layden Street address, there's a Colorado state tax. I think that's an Adams County tax. There's a city tax, and there's some special jurisdictions, which are a scientific and cultural jurisdiction, as well as a specific Denver area tax. So I want to focus on Nexus here for the next few moments. And again, Nexus is just an industry term for where your company has created an obligation to go register for sales tax, to collect sales tax and to file sales tax in the future. Nexus can be created by a very, very, very long list of activities that your company may have in these states. I'm only going to highlight a few of them in this chart, but historically, and this is kind of prior to the Supreme Court ruling last summer, typically companies would trigger Nexus through physical presence in other states. So the state that you're based in, right, maybe that your kind of headquarters, brick and mortar location is, most of your employees, because you have a physical presence in that state and that's where your company is based, you're going to have Nexus in that state. So you're going to be registered potentially and then collecting, filing sales tax in that state. But what about other states? Well, historically, companies that hired remote employees in other states, or if they did a significant amount of travel into other states, either going to trade shows or maybe going on site to visit their clients or going to other events, that would typically trigger Nexus. Companies that would store products in warehouses in other states, either a third-party warehouse or their own warehouse, would typically trigger Nexus. And even companies that use their own trucks to deliver into other states, right? Typically a third party does not do that, like FedEx or UPS doesn't typically expand Nexus for you. But if you use your own trucks and you're going into other states, that's seen as a physical presence or kind of a boot on the ground that typically will trigger Nexus. Now, a lot of what's on this list I haven't covered, and some of these are non-physical ways that Nexus can be triggered. The one on the top left, affiliate Nexus, is very interesting. I'll give you an example of affiliate Nexus. So I talk to a lot of companies on a daily basis that sell online. They have kind of their own shopping cart on their website. You can go to their website, you can add some items to the cart, you can make a purchase this afternoon if you like. However, they will also have affiliate relationships with other companies where they'll say, hey, I'd like to have a relationship with another company where I put a link to my website on their website. And so when people visit my affiliate, my friend's website over here, and they click on that link, it's going to drive them over to my site so they can buy something from me. Well, that affiliate relationship is something called click-through Nexus, and it's when you're driving traffic to your website from another website. That actually creates Nexus in quite a few states. So even though there's no physical presence involved at all, it's just that affiliate relationship, right? Driving traffic through those links actually creates Nexus. Let's talk about what changed last year. This is the South Dakota versus Wayfair Supreme Court ruling. Hopefully everyone on the call has heard about this, but I'm going to take a few moments and I'm going to talk about it. So to give you some background on how this decision came about, at some point in the past, I think several years ago, South Dakota approached the company Wayfair. I'm sure you're all familiar with Wayfair. And they said, hey, look, we think that because you sell so much of your product into our state, you ship just millions of dollars worth of your product into our borders every year, that we should be able to get some sales tax on this. We feel like we're owed some sales tax on this. Well, Wayfair didn't agree, as I'm sure you can imagine. Now, this ended up going through the courts and ended up in front of the Supreme Court. And on June 21st of last year, the Supreme Court ruled in favor of South Dakota. And it introduced this concept of economic nexus. Now, what that means is it doesn't do away with physical presence, right? So companies that have remote employees in other states, or they store product in other states, or they go to trade shows, or they have locations in other states, that is still very much a nexus trigger. But what it introduced is economic nexus. Let's talk about South Dakota specifically. Now, what this law affected is remote sellers who are not currently registered in the state, who sell a certain amount of a certain dollar amount of their product or service into the state, or they have a certain number of transactions that result in South Dakota. And again, this is remote sellers, right? So companies based in South Dakota should already be registered in that state. But let's say that you're based in North Carolina and you just sell over $100,000 worth of your product or service into South Dakota, or you've got a couple hundred transactions that result in South Dakota. If that's the case, then you would trigger economic nexus. And you can see there in the actual, the threshold there, the key word or, right? It's not and. You don't have to do $100,000 and 200 transactions. If you do either one of those things, it creates economic nexus. So South Dakota said, hey, look, as of November 1st, 2018, any companies that are remote selling into our state, if they cross either one of these thresholds, they've got to get registered for sales tax and collect and file moving forward. These are just a couple of frequently asked questions. I mean, the key thing here is whether or not economic nexus applies to non-taxable transactions, or does it affect taxability? The answer is it does not. The economic nexus law that passed last year from the Supreme Court, it did not change anything about what is or is not taxable. Now that changes sometimes from state to state because states will pass state-specific laws around that, but that particular law did not affect taxability. A couple other things to keep in mind as well. We already talked about this. It applies to taxable sales made to consumers. Doesn't change what's exempt, right? It will apply to service providers. So this is something else that I want to make sure to highlight. A lot of folks who have kind of a sort of a vague understanding of the law and of economic nexus think, oh, okay, well, it only affects online sellers. It's only for e-commerce, and it's only for products. That's not the case. Economic nexus applies to every sale that companies have into states, whether it's a product or a service, and in some cases, even if it's non-taxable. So you have to look at each individual state's law as to what they're counting towards the threshold. So for example, California, their law went into effect April of this year. It's $500,000 of revenue into the state. However, they're only looking at retail sales. They're only looking at things that would be subject to sales tax. So if everything you do in California isn't subject to tax, because maybe it's a service they don't tax, you're very likely not going to trigger economic nexus. But a state like South Carolina has said, hey, we don't care if it's taxable or not. We're looking at gross sales into our state. And if you exceed South Carolina's threshold, they're wanting you to get registered for the state, even if you aren't necessarily remitting tax currently. You may be filing a $0 return. So again, high level, what is economic nexus, right? Has nothing to do with physical presence, okay? It has to do with economic activity within the state. So in some cases, it's transaction volume. In some cases, it's revenue. In some cases, it's both. You just have to look at each individual state's law. Here are all the states currently affected by economic nexus. Now, we just spent a few minutes talking about South Dakota. That's one state. Well, since June of last year until now, look how many additional states have jumped on board and have passed economic nexus laws. There are only kind of a few stragglers, if you will, out there. And some of these aren't going to pass them because they don't have sales tax. So there are actually 5 states that do not have sales tax. We call them the nomad states: New Hampshire, Oregon, Montana, Alaska, Delaware. So as you can see, there's a couple there, like Missouri and Florida, and I don't believe they have economic nexus laws to this point, but if they don't, they will in the near future. But this just goes to show you that in a little over a year, this massive wave of change in sales tax compliance has affected almost every state in the U.S. And they have thresholds now either for revenue or for number of transactions, sometimes both. And depending on where your company is selling a lot of your product or a lot of your service, you very likely now have an obligation to register in many more states than you would have had, say, 12 to 18 months ago. Let's talk about what this means for Amazon sellers. Now, as I mentioned at the beginning of the call, I work with a lot of e-commerce companies, right? Folks that are selling products and services online. And a lot of these companies will not only have their own website with a shopping cart or maybe multiple websites, but they also sell through marketplaces. So they sell through Amazon or eBay or Etsy, any of the other marketplaces out there. Amazon sellers in particular are affected pretty significantly by not only physical presence nexus, but also economic nexus. So let's think about an Amazon seller for a moment. And really it depends on the relationship you have with Amazon. There are a couple ways that you can sell through Amazon. One is merchant fulfilled. So that means if I started a company and I decided to sell on Amazon and I was going to do a merchant fulfill model, it means Amazon provides the platform for the customer to place the order, and then I fulfill it. So I've got it stored somewhere, I package it up, I ship it to the customer. They're really only kind of facilitating the processing of the transaction. You can also sell through Amazon through the Fulfill by Amazon model, the FBA model. That's where not only is Amazon facilitating the transaction, but they're actually going to fulfill it for you. So you send a bunch of your inventory to them, and when the customer orders, they're going to package it up. They're going to be in charge of getting it to the customer, shipping it to the customer, right? They are fulfilling the order in this case. Now, the FBA model is extremely tricky, and it adds a lot to, the complexity of a company's sales tax compliance footprint because of physical presence. Think about Amazon Prime for a moment, right? Amazon Prime is great because it means that Amazon can deliver a product to you sometimes the next day, sometimes 2 days, right? Sometimes even sooner than that. But that's because they have that product most likely stored in your state or a neighboring state, so they can get it to you rather quickly. That means they have warehouses across the country, and I think at last count, Amazon had fulfillment centers in about 35 states. So companies that are doing quite a bit of sales through Amazon, and they're doing this FBA model, they're sending inventory to Amazon. They still hold title to that product. They own the product. It's just being stored in a third-party warehouse. Well, guess what that does? It creates physical presence nexus in all of these states where Amazon decides to store the product. So there are companies that get started with Amazon, get started through this FBA model, and they a year may go by, or 2 years, or 3 years may go by, and they have no idea that Amazon's moving all these products across the country. And then all of a sudden, the state of Texas is knocking on their door and saying, "Oh yeah, we got a list of sellers, from Amazon saying that you've had a product in our state for 3 years." Well, guess what? We want all that uncollected sales tax that you should have been paying us all this time, and we're probably going to penalize you because you're out of compliance, right? So these marketplace sellers that store product in warehouses across the country, they've got to be aware of that product, where that product's going, and they've got to be registered in those states so they don't create any exposure for themselves in the future. But as you can imagine, economic nexus is greatly affecting Amazon sellers as well, because not only do they have this physical presence where their product is stored, but in states where they don't have that physical presence, if they're going over 100K in most cases in revenue, or a couple hundred transactions, all of a sudden they have to get registered in those states as well. And a lot of companies now are being affected by both, right? They've got physical presence that gives them a reason to get registered. Now they have economic nexus. And typically, companies should start with, well, hey, sort your sales by state. Look at the heavy hitters. It's usually the high population states where you're going to hit economic nexus first. States like California, Texas, Florida, New York, for example. So the real question is, can all this be automated, right? How do you prepare for this? How do you make it easier? Well, that's where we come in. That's what we do, right? As I mentioned earlier, we're the industry leader currently in sales tax automation via the cloud. So we've developed a software that can help you calculate sales tax within QuickBooks and 700 additional platforms out there. We also have a service that can manage and kind of automatically file your sales tax returns from state to state. And we can even start with a Nexus study. That's actually where a lot of our customers will start before they engage us for any software. They'll say, hey, look, I have no idea where I need to be registered right now. And that's something to think about as well. If you think about your company currently, you're probably registered in your home state. You might be registered in a couple states because maybe you have locations in a few states. But think about all of the activities that your company has across the country, right? And now you have to include economic activity. But think about where you may have a traveling sales force that's going, either on site to visit clients or maybe going to trade shows. Think about, if you're using a third-party warehouse to store your product, are you delivering product to other states using your own trucks? Do you have remote employees in other states? And these remote employees don't have to be sales folks. In a lot of cases, it could be a board member for your company, and that could create sales tax nexus. Think about the affiliate relationship we talked about earlier, right? Are you using other companies' websites to drive traffic to yours? Because if you are, you very likely have nexus in a few states. So what we can start with is a formal nexus study. We have a team of tax experts in-house here at Avalara that's made up of CPAs, tax attorneys, former state auditors. One of the professional studies they will offer is a professional nexus study. So we can take a look at your company's activities across the U.S. We can look at where that physical presence has taken place. We can look at what kind of work's being done. We can look at your historical sales data, see if you've crossed any economic nexus thresholds. The end result of that study is a definitive report that says, hey, look, based on your activities in these states and based on our interpretation of the laws and statutes in those states, we think you have nexus in 10 states or 20 states or 30 states, or maybe it's only 5 states, right? But at least gives you peace of mind of knowing, hey, look, now I know where I need to be registered for sales tax. Moving to the registrations piece, that's another service that we offer. So once we've helped you determine where you need to get registered, where you have nexus, we can help you with that. Our fee for registrations is, I think it's about $200 per state currently. It typically only takes a couple days to complete a registration once you've completed an initial survey that comes out that needs to be completed with some general information about your company. but we can turn around sales tax registrations very quickly if you need our help with that. The final piece is our software. So we have an integration to QuickBooks Desktop, or Enterprise, if you will, and also QuickBooks Online. But we also have integrations into about 750 additional platforms. So, your company may be on QuickBooks Now. You might have a shopping cart like WooCommerce or BigCommerce or Shopify Plus or something like that now. Well, what happens in 4 or 5 years if you happen to change your accounting platform, right? Or maybe you move to an ERP, or maybe you implement another shopping cart. We'll have integrations into most of those platforms so that we can scale with you as you grow. But let's focus on QuickBooks for the moment. What you see here is obviously a kind of a picture of or a screenshot, if you will, of an invoice in QuickBooks Enterprise. We have an integration of AvaTax that will plug right into QuickBooks. And what it will do is calculate sales tax in real time as invoices are being created. It bases the calculation on, first of all, the customer's address, right? So you see the address, the ship-to address on this invoice is in Half Moon Bay, California. Our software knows in an instant that at that customer's address, there's a state rate for California, there's a county rate, there's a city rate for Half Moon Bay, and then there may be 3 or 4 additional special, local, or temporary taxing jurisdictions. We do this for every state across the country, whether it's a state with 3 or 4 tax rates or a state like Texas that has over 1,500. The second thing we can do as these invoices are being created is a taxability determination. So depending on what you're selling, you may have complex taxability, right? If it's general tangible property, it'll be pretty straightforward. It's usually going to be taxable unless you're selling it to an exempt entity. However, if you're selling, software, medical devices, nutritional supplements, apparel, things that are going to have varying taxability from state to state, we can make that determination for you as you're creating these invoices. So, in the example here, a big computer is line item 1. That's typically seen as general tangible property. It's usually fully taxable. Software maintenance contract, line item 2, freight. These are 2 items that are going to be taxed differently from state to state. As I mentioned earlier, California doesn't tax software as a service, but they do tax a maintenance contract that's associated with that. Freight, same thing. Some states say it's subject to tax, some states do not, right? But in that split second, as you create an invoice, we can not only calculate the tax based on all the jurisdictions in play at that customer's address, we can do a quick taxability determination of what you're selling. The end result is we're going to bring the tax back so you collect the right amount from your customer and you can turn around and remit the right amount to the state. Now, speaking of remittance or filing returns, that's the second solution that's kind of offered by AvaTax, right? It can calculate your tax, then it can prepare the filings, it can file them on time in the various states, and then remit the tax that you've collected. So if you want to outsource the entire process to us, calculations and returns, we can absolutely help with that. But one thing I want to really stress here, and this is what differentiates our solution from what you may natively rely on in your accounting platform or a lot of our competitors in the space, is that we keep all of these thousands of rates, rules, and boundaries, and all of the taxability rules around products and services up to date in real time on the back end. So if you implement our software into QuickBooks and 3 days from now, a random city in the state of Texas bumps their sales tax rate up by 0.5%, we're going to adjust for that. You're never going to have to go in and manually adjust anything yourself. Again, this slide's a little bit older. We actually have over 750 pre-built integrations at the moment. But this just shows you that we play in a lot of these spaces very well. The CRM space, the ERP space, e-commerce space, point of sale systems. You'll be very hard pressed to find a platform that you may move to in the future that we don't have some kind of integration into. And another thing I want to bring up as well, and I don't really have a slide for this, but I mentioned it earlier in the presentation, a lot of our customers will sell to exempt entities, right? So maybe they sell their products to resellers, or maybe they sell to schools or hospitals or nonprofits, whatever reason that entity may be exempt from sales tax. But that means that if you're doing that, you have to collect exemption certificates from your customers. Part of AvaTax, kind of an extension of AvaTax, and again, that's our solution that will calculate tax and file returns for you. We have another extension called CertCapture, and it is a way to digitally manage all the exemption certificates that you receive from your customers. Now, the great thing about CertCapture is it not only stores them digitally, so they're very easily accessible in case you're ever audited, but it validates certificates. So the first time that you get a new certificate from a customer and you upload it into CertCapture, it's going to make sure it's filled out correctly, right? That means it would pass audit. The second thing it does is it maintains all of those expiration dates for you. So let's say you have 500 certificates on file for various customers that you have. There's a good chance that a number of those certificates never expire. And that's because some states will issue companies exemption certificates that last forever. They just, as long as they don't lose it, it's still valid. But there are a lot of other states that issue certificates that expire every 6 months or expire every year. And you've got to track those expiration dates, because if you have a certificate on file for a customer and it expired 6 months ago and you get audited, you're going to get dinged for that. So CertCapture will track that and let you know, hey, look, you've got 50 different certificates that are expiring in the next 60 days. And then you can run a campaign out of CertCapture that will reach out to those customers specifically, and it'll say, hey, customer XYZ, we have a certificate on file for you. Unless you can provide us a new certificate, an updated certificate, we'll start charging you sales tax. But if you can provide that, here are the steps below. And if they just follow the steps in that email, they can upload the new certificate. It'll come back into CertCapture. But the great thing is that AvaTax and CertCapture speak to each other moving forward. So if you have AvaTax integrated with QuickBooks, and you're also using CertCapture to manage your exemption certificates, then when you go create an invoice for a customer, part of what we do in that split second is we just check CertCapture. Say, hey, look, do we have a certificate on file for this company? Oh, we do. Well, then we're not going to return sales tax for them because it's valid, it's a current certificate, right? If that certificate has expired and that customer never followed the instructions you sent them to give you a new certificate, guess what we're going to do? We're going to bring back sales tax to that invoice because you should be collecting it from them because they haven't provided you a valid certificate. Again, just another kind of long list of the different platforms that we currently integrate with. So that really concludes what I wanted to speak to today. I do want to thank Jennifer and our friends over at Out of the Box for including us in Technology Tuesday. And Jennifer, I think we have some time left over if any questions have come in or if anyone would like to ask any questions at this point.
Absolutely. Thank you so much, Mark. Again, if anyone does have any questions about what Mark went over today, you can go ahead and use the question function on your GoToWebinar control panel and send those over. Our first question that we have is, you touched on the Nexus study. How much does that cost if someone wanted to get involved with that?
Mm-hmm. Yeah, so our Nexus studies are all state studies. They're a flat fee of $4,500. And they typically can be completed within 1 business week. So the way the project starts is we send out a questionnaire with about 100 different questions that need to be completed. Now, what our team says, and I think it's true, is it's an exhaustive survey, if you will, but it's not exhausting to complete. But we need to collect data from you about the different activities that you've had across the country. So, where you have employees, where you go to trade shows, where you have brick and mortar locations, and then we ask you questions related to your sales in the states in the past couple calendar years as well, so that we can factor economic nexus into that. But once that survey is completed, our team can typically turn the results around in about 3 or 4 business days, and they actually schedule a call with you to go through the report in detail to make sure you understand our findings and just to see if you have any additional questions or clarifications that we need to do for you. But the flat fee for the Nexus study is $4,500.
Great, thank you. It sounds like that's really beneficial to several clients, I think. That's awesome that you offer that. Let's see. I think actually that is the only question. A couple you answered as you went along. Here we have a few more coming in. So the next question is, how much is AvaTax and the CertCapture? And can you only have CertCapture or do you need to have both?
Yeah, so our pricing model is all consumption based. So for us to calculate your sales tax, we would want to have a sense of how many invoices you're going to create over the course of a year. We do 1-year agreements. So if you said, hey Mark, we're only going to do like 200 invoices over the next year roughly, you'd be in kind of a lower tier for calculations. Or you might say, hey, we're going to do 10,000 invoices or 50,000 invoices. Or maybe we've got a shopping cart online and we have a ton of e-commerce sales as well. But we'll basically have tiers that sort of match the either invoice or transaction volume. Very high level. I mean, if you're only doing a couple hundred transactions, you might pay us as low as $50 a year to calculate your sales tax. And then it just goes up from there, right? I think if you're at like 10,000, if you're at like 10,000 invoices, it's something in the range of like $2,400 as an annual fee for us to calculate tax in QuickBooks. The returns filing is very straightforward. It's about $50 a return. So it just depends on how many states you're registered in, and then how often you file. For a quarterly state, for example, you'd pay us about $200 a year, and then obviously for a monthly state, you'd pay us about $600 a year. Cert Capture, to answer your question, yes, it can be used as a standalone product. So if you don't have a need for our integration to calculate your sales tax, if you would prefer to handle your returns in-house, that's perfectly fine. You can still purchase our Cert Capture product and use it as a standalone to store your certificates, to validate them, when they're received from customers, to track the expiration dates, and then to run those campaigns out to customers when you have certificates that are expiring. The Cert Capture pricing is a little more customized just based on kind of the need and sort of the volume. So we can certainly have a discussion about that, but it'd probably be better to set up a call and just make sure we understand kind of what the needs are, how many certificates are in play, what kind of benefits of Cert Capture are needed, and then we can price that out.
Great, thank you. And yeah, if anyone does want to dive deeper, have really specific questions to what you're offering and whatnot, I think that you're definitely available to do that. So thank you for making yourself available. Our next question is, I think when it comes to the pricing or the availability, is this based on number of invoices or the dollar amount of the invoices?
Great question. It's based on the number of invoices. So it's literally just the number of transactions. So we don't really, it doesn't matter if it's a $10 invoice or a $50,000 invoice. We're just looking at number of invoices. So dollar amount is not applicable in this case.
Okay, great. And then is the setup fee in addition when you're getting started?
So I'm not sure I understand the question. Is it that, I think maybe what they're asking is, are there setup fees or implementation fees? The answer to that is, it depends. So there's a couple different ways. Like I typically work with companies that are using QuickBooks. So they're purchasing our QuickBooks integration. The QuickBooks integration for AvaTax is a self-serve or self-installation product. So if you're pretty tech savvy, or you have a team of folks internally, or you're pretty good at just kind of following directions that are sent to you via email, we do send a very easy to use toolkit that describes how to install the product into QuickBooks, how to set up your company profile in terms of selecting your nexus states, telling us what you're selling, things of that nature. So you can absolutely go down a self-serve path where there would be no additional fees. We also provide some implementation options. So if your preference is, hey, you know what, I would rather have someone from Avalara's in kind of walking me through this process, making sure I'm setting everything up correctly, so I have kind of a project manager that I can bounce my technical questions off of for the first couple months I'm a customer, then we can certainly provide that as well for a fee. And it can range anywhere from like a couple $100 up to like a couple $1,000, just depending on how much implementation support is needed. And typically the number of products that are being installed, we will recommend kind of an assisted implementation support as well. I mean, if you're just plugging us in to do some calculations in a couple states, you won't need any of that implementation support. But if you're implementing calculations and returns and Cert Capture, and you're turning on 40 states, and you happen to sell products that have extremely varying taxability from state to state, like software and medical devices, that's where we're going to highly recommend assistance with implementation, because there's so much more complexity in the setup, and we just want to make sure that that's done correctly.
Wonderful, thank you. Our next question is, how does this work with QBES, since it's the desktop version and the integration in that environment?
Yeah, great question. So AvaTax can actually be installed at essentially a server level to where multiple workstations can access it, or it can be installed at a workstation level. So there's only like one or two machines that need to have it. So it's really up to the end user how they would prefer to install. We also have a lot of customers that will be using, like a desktop or enterprise version of QuickBooks that happens to be hosted through third parties. That's not an issue as well. We just need to know that up front, but we can accommodate that for implementation. So short answer is either way. We can be on one machine at a workstation level, or we can be server level where multiple workstations can be accessing it.
Great, that's good to know. Thank you. Our next question, Mark, is regarding audits and penalties. If a client is working with Avalara, will Avalara help handle those, or what's the process when it comes to audits and penalties?
Sure. So when it comes to, let's say, a future audit, the one thing I'll say is we are not a replacement for like a CPA or a tax attorney when it comes to audit support, right? So if you need someone on site to actually kind of provide sort of some hand-holding through that kind of a process, that is not something that we provide. What we do provide, though, is a completely automated solution that will calculate tax, will file returns, will potentially handle exemption certificates if you need that. But companies that are using our software will typically find that audits they have in the future go by very smoothly, because everything that's done from a calculation standpoint, from a filing standpoint, not only is it done on time, it's done accurately, but everything is digitally stored in our software. So one of the hardest things when you go through an audit is, they'll show up and say, hey, look, we want to see, all these different kind of sections of your transactions or subsections of transactions you've had in the past, right? Like we want to see last month's, and then we want to see, April of 2018, and then we want to see March of 2017, whatever it may be. Well, because you're using our software, you can give them access to all those transactions and the tax that was calculated in a matter of seconds. The same thing with returns. We store all returns that we file for you in our software digitally for up to 7 years. And the whole reason we do that is just in case you get audited, that information or that data is there and it's easily accessible and it's accurate. Now, in terms of an accuracy guarantee, we do offer that with our product. There is a caveat, obviously, that assuming that everything is set up correctly, meaning that you've told us the proper states that you're registered in, you've told us accurately what it is that you sell, right? So just assuming that all has been done accurately, if you go through an audit and you receive, basically a negative audit finding, then we will typically cover the penalties or interest or whatever results from that negative audit finding. We even, in some cases, will refund up to a year's worth of our service, if it were to come to that. So, but I can tell you that, I think it's an extremely rare instance that you're ever going to see an inaccuracy from an AvaTax calculation. It's typically because during setup, the proper tax codes weren't selected in terms of telling us what's being sold, or maybe a state wasn't turned on when it should have been. But we certainly have some guarantees in place that that hopefully give you some peace of mind if you do have some negative audit findings. Now, the other thing I will say about penalties and interest and sort of past exposure is that same team we have in-house that helps companies with nexus studies, they are called our tax advisory team. They also help companies that have past exposure and they're trying to clean that up in states. So one of the things that you can, one of the outcomes of a nexus study is you're going to find out, well, hey, here are all the states where I need to go get registered, or I have nexus, right? I have a registration, collection, and filing obligation. Well, once we determine that, we want to have a conversation with you about, okay, well, when did this actually start, right? Because there's a chance that if you created nexus at some point in the past, that you may have some unpaid tax that's actually owed to the state. And if the state would find out about it, not only would they want all the tax, but they would put penalties and interest on top of that. And there are certain formal programs that you can go through, and we offer these as well in these states that can mitigate the kind of the damage from that past exposure. So in some cases, we can limit the look back period that a state can expect you to pay. We can completely waive the penalties, and then it's a way to get all those back returns filed. So that's not needed for every company, but companies that do have specific exposure concerns about past activity, we have services that can help with that as well.
Perfect, thank you. One more question that we have here in the queue is, do you have anything that flags the client to collect an exemption certificate at the time of sales order creation, like something that'll kind of automatically push that if it's going to be an issue?
Yeah, great question. So Cert Capture is the tool, again, that I've talked about that'll manage exemption certificates going forward. There are elements of Cert Capture that can be purchased that will help you collect certificates from customers. Now, standard trust file, like if you don't have an let's say you're just purchasing Avatax because you invoice out of QuickBooks and you're never going to sell anything online. It's just going to be invoicing you do on the back end. If you buy the standard version of CertCapture, then you're going to have kind of a collection tool that comes with that you can email out to your prospects. So you can say, hey, here's essentially a landing page, if you will, where you can upload a new certificate and it'll come back into CertCapture. So that just comes standard with CertCapture. There are some companies that we work with that say, hey, you know what? I sell online and it's through a shopping cart that I've developed. And what I want to be able to do is I want that customer to be able to come to my website and order something from me, but I want them to be able to provide a certificate during that checkout process when they're purchasing online, and I want that to immediately be validated and then not have them pay any sales tax. That's actually kind of an extension of CertCapture that can be purchased and implemented for those rare instances. So for companies selling online, it is possible for us to kind of build out a custom integration of CertCapture that will allow online customers to submit a certificate and have that validated as they're placing an order online.
Excellent. Thank you for going over that as well, Mark. So at this point, I don't have any other questions. I know a few people had asked if you could share some contact information if they did want to get started, if there's a best way to touch base with someone at Avalara, or if they should go through us here at Out of the Box and we can make that connection. Either way, but if you had some contact information, you can go ahead and share that.
Absolutely. Let me see if I can get that back on the screen here. There we go.
Perfect. Thank you.
Yep, absolutely. So feel free to email me or give me a shout if you have additional questions, and more than happy to have a more in-depth conversation about your company specifically, or we can cover anything that was covered on the presentation.
Great. Well, thank you so much, Mark. We really appreciate you joining us today. Always a pleasure to have the folks over at Avalara. We love working with you. The services and solutions that you provide really are top of the line. So anyone who's on the line or listening to this as a recording, they really know their stuff over at Avalara. We trust them very much so. So if this is a direction that you wanted to move in, something you wanted to explore, certainly reach out to Mark and his team, and they'll take great care of you.
Thanks for the kind words, Jennifer. And we, as always, we appreciate working with you and our friends over at Out of the Box. And hopefully we can continue to work together in the future, and we just really appreciate this opportunity.
Of course. Thank you so much. And with that, I'm going to take things back on my end and just share my screen, talk about some upcoming Technology Tuesdays that we have. In 2 weeks, we will have our Recur 360 quarterly updates. If you were trying to join us last week, GoToWebinar was having some technical difficulties and was actually down right at the exact time of our presentation. So that's been rescheduled for August 27th. Barb will be on with us going over some exciting new features that are being offered in Recur 360, the app that we at Out of the Box developed ourselves from the ground up. And then in September, we will be having Fishbowl giving a presentation, and then a couple folks from our marketing department, including myself, will be giving a presentation on some powerful marketing tools to boost your business. So I'm excited about that one. So check us out. We are offering these, of course, for free, and you can register on our blog. You'll be getting an email in about an hour that'll have a link to this recording, as well as a link to get registered for any of our upcoming Technology Tuesday presentations. So if you have any questions, if you had a topic or a solution that you wanted us to explore and present on Tech Tuesdays, you can reach out to me. If you have any feedback or just want to chat, I'm always here. So there's my contact information. Again, Mark shared his. If you weren't able to capture that, you can ask me and I'll forward it along for you. But thank you all so much for joining us today. We really appreciate you taking your time, and we hope to see you at our next Technology Tuesdays. Thank you so much.